Hello there, Mr. and Mrs. Sandoval. My name is Robert McGuirk. I'm your financial advisor that you recently came to, and to kind of figure out your financial plan for you. I certainly appreciate you guys entrusting me with doing just that. And I know you guys are busy, so I'll just take a couple minutes of your time here. We'll go over just a small piece of your plan. There's going to be revolving around your home purchase. Purchasing home is one of the bigger purchases that people make throughout their life. So kind of got to make sure we're doing this right. So we'll kind of hop right into it. The first question that you guys kind of wanted me to figure out for you guys is what's going to be your tax liability on your house if you sell it for, let's even call it a little more than the $125,000 that it's worth. Um, Based on your guys' tax filing status, married, filing jointly, you guys are going to have to pay any taxes on it. That's because that you are able to exclude a gain of $500,000 because of your tax filing status. So, whatever you're even we're not very aware of kind of what you purchased for the house, but because the house is worth $125,000 right now, you guys won't even have you won't come anywhere close to a gain. So that's definitely good there. You won't have Uncle Sam come for your taxes that way. Now we'll kind of hop right into it. I'm going to be throwing a lot of numbers at you here, so try to keep up. But if you can't, then have no fear. I'm going to give this to you guys right after the meeting. We kind of go over it, but just try to hang tight with me here. So you guys said that you're looking to. You guys, first off, just want to know what would be the monthly mortgage payment on your guys' house. I see that we have interest rates around 3.5% for 15-year mortgage. 4.125 for 30-year mortgage. So I'll kind of just break down the 15-year mortgage, see what your payment's going to be there. I'll kind of give you a brief overlay of how I get there, but if you guys have any questions, I'll be able to answer after. So you're gonna need about a $200,000 mortgage. The way I got that is because you 20% down, which is about 50,000 on 250,000. So you're gonna need a $200,000 mortgage. You're gonna be paying it off for 15 years. Break that down to months. That's 180 months. And your interest rate, like we said, 3.5% over. That's breaking up monthly. So your monthly mortgage payment on the 15-year mortgage, we're looking at $1,429.77. Now, I'll kind of give that as a comparison for the 30-year mortgage, and what we're looking at there is once again a 200-year mortgage or $200,000 mortgage, excuse me, and you're looking at a 360 month. That's because we're doubling the months. We're 30 years, 12 months, 360 there, and your interest rate, like we mentioned earlier, 4.125%, and your payment there $969.30 a month. So just based on that, you're saving about 100 or $500 a month in mortgage payments. So that can look good on one side, but depending on how you spend that extra money. But we'll kind of look at your next question, and we'll kind of see how much actual interest you're paying for that 500 extra dollars a month. So what we're looking here, if you were to just break it out as simple as possible, your monthly payments times the amount of months. So on the 15 year, you would pay a total of $257,358.60. Now, kind of like we discussed earlier, you're putting, your mortgage is $200,000. So for that $200,000, you're basically paying $257,000. We'll just call it that. We'll leave off the hundreds of dollars, just for simplicity's sake. So you're paying around $57,000 in interest there. So that's, once again, it's interesting to know, but we have to figure out how to use that as a baseline. And for the 30-year mortgage, if you're paying like we said, the $969 every single month for the 360 months, you're looking to pay a little less than 350,000, 49,000 ish to be exact. So once again, because you guys have the $200,000 mortgage, that's almost $150,000 in interest that you're paying, just for interest there. So, with that being said, you really have to consider, your time frame in the house, how are you going to refinance over, are interest rates going to go up or down kind of throughout the life of the loan. But that's just something to consider, that you're paying almost 3 times the interest for twice the amount of years or time to pay it off. So that's something we have to consider. Now, you guys also mentioned when you guys retire in 25 years, how much would you have to pay on the mortgage? And of course, we're assuming that you guys go with the 30-year mortgage here, because at 15 years you guys be long paid off. Now, you guys would still owe a little over 50,000, $52,471 to be exact, on your mortgage. Now, this is just entered by some keystrokes in my financial calculator. This is a little in depth though, so if you guys really want, I could show you after the meeting. But I can also, just show you guys financial plan. Like I said, we go over it right after. Now, two big main items that we have to consider when you're purchasing a house, and those come down to how much is the house going to cost, and how much is your total debt going to cost as a percent or as a fraction of your kind of monthly income. So here, the first test is the 28% test. Kind of just sounds kind of how it is. You don't want to have your monthly housing costs, which include principal, interest, taxes, and the insurance on the house, to exceed 28% of your total income throughout the year. Now you guys' total income throughout the year, we're looking at your salary, we're looking at interest and dividends from your kind of stock accounts, those types of items there. So I calculated your monthly inflows of around $11,231 a month. Now, obviously, times out a year, that will get your kind of gross salary for the year, but that's around $11,200 a month. Now, for the 15-year mortgage, you guys are looking at around $1,754 a month, and that's including the monthly mortgage payment, which takes up the bulk of that, with around $1,400 or so. But then you also have to take in consideration the taxes and insurance on your property as well, and you typically pay those over the year, so we'll just kind of tack those on kind of your monthly purchase. So that'll get you around $1,700. So with the 15-year mortgage, taking all that into consideration, you guys are around 15.6% of 28. So that's well below the 28%. I would say that's go ahead, and you guys will be able to go ahead and afford that comfortably, and you're not paying too much of your salary for your house. So that's that. Now, on the 15-year mortgage, or on the 30-year mortgage, I apologize, you're looking at around a little less than $1,300, $1,293 to be exact. And once again, that's taking into consideration your monthly payment, which is around $970. Then we're adding on your taxes and insurance as well. Now that's only 11.5% of your salary. So once again, whatever route you tend to go here, you're going to be well under the income to debt restriction or ratios. So I feel comfortable saying that you guys can go with whatever route you want here. Now, lastly, very similar to a 38% test, we're just looking at the 36% test. Once again, that's just kind of your consumer debt and your house as a function of your income. So what we're looking at here, your inflows are going to stay the same, around $11,200. But we're also going to take into consideration your credit card and auto lease payments as well. So for the 15-year mortgage, you're looking around a little less than, or a little over $2,900 a month. Now, once again, that's a lot's coming from your house payment, but then a lot's coming from your, those debts as well. And you're looking at around 26% there. Once again, well below the 36%, so I'm comfortable saying go ahead with the house there. And 2,400, a little less than 2,500 for the 30-year mortgage, and that will get you around just under 22%. So once again, I feel comfortable saying that you guys go ahead and purchase this house, as long as you guys, looking to upgrade your house. You guys are well under all the ratios, and I would say you might want to go with a 15-year mortgage because of the amount of interest that you'll save over time. So thank you very much for listening in. If you guys have any questions, give me a call and I'll be able to help you out. Thank you.